Hey everyone, it's Ben Hardy here, and in today's video I'm going to be talking about how I did a little experiment for the channel. I took out a car loan in what is potentially the worst time to take out a car loan to see how difficult it was to get approved and what kind of interest rate I could actually get on a car. So I'm going to dive into all of the details in today's video. Before we get into this video though, as always, if you want to save time and money the next time you purchase a car, link to my car buying guide in the description down below. And then if you want to see more videos just like this, then I recommend you subscribe because I post content every single day. Let's get into it. Now, before we discuss the interest rate that I got on this car, I need to basically set the stage for this video in the form of giving you guys all of the details to explain how I got the interest rate that I got. Because if I just throw out the number without any context, it's not really going to make a whole lot of sense. So first off, as of Q4 of 2022, the average interest rate for a brand new car was just over 6%, and the average interest rate for a pre-owned car was just over 10%. Now this was Q4 of 2022. Interest rates have increased since then, and I can tell you based on what I hear from dealerships, most people that are taking out a loan on a new car are getting a rate of over 7%, and most people that are taking out a loan on a pre-owned car are getting a rate of over 12% typically at this point. And so that is what the norm is currently within the car market. Now, the car that I purchased was pre-owned and it had about 4,800 miles on it. Now, I'm not going to say what car it is because I haven't posted the announcement video on the main channel. And if I give too many details on the car, then people will be able to know and it'll run the announcement and then the video will probably get no views. So sorry about that. I'll give as many details as I can outside of naming the car itself. But pre-owned car, I will say it is a 2020 model year vehicle. And so it's not brand new in terms of being pre-owned. It's a few years old at this point. Frankly, it's almost out of manufacturer warranty. And so it's not in the worst position for a used car in terms of how a lender views it, but it's also not in the best position. The things that are going for this car is, again, relatively new. It's got pretty low miles, again, 4,800 miles on the odometer. So now we have to talk about my situation when it comes to credit, because your credit situation is going to weigh very heavily on what interest rate you get on a car loan. So when they pulled my credit, they pulled the Experian with the FICO Auto V2, the FICO Auto V3, and the FICO Auto V8. So my first score came in at 799, my second score came in at 824, and my third score came in at 831. Now, some people might be wondering why they didn't pull TransUnion or Equifax. They don't really have to do that with the lending institution they went through. They just needed to pull Experian. And so as you can see, when the lending institution looks at my credit, they're going to see that I'm right around the 800 range in terms of credit. And when it comes to auto loans, if you're 760 and above, you're top tier. So you're going to get the best possible interest rates. Now, the next part that's really important is going to be loan to value. This is the ratio of the value of the car compared to the size of loan you're taking out on the car. Now, on this channel, I have hammered time and time again that you want to make sure that your loan to value is under 100%. Because if you're under 100%, then that means that, well, if something devastating happens to you financially, then you can sell the car and you're not going to be upside down, or most likely won't be upside down, and you'll get a much better interest rate on the car. Because if you're over 100%, that completely changes the dynamics, because the lending institution is giving you more money than what the car is worth. And so if you default on a payment, then the lender is going to be on hook for more money than what that car is worth. And so obviously they're not going to give you the best possible interest rate. So with this particular car, I did put money down on the car. Now, I won't say the exact amount, because if I say the exact amount that I put down, then people are going to be able to, the other numbers I give in the video, they're going to be able to put those numbers together and then figure out roughly how much the car costs, which would then give them an idea of what I purchased, because I've talked about several cars and the price ranges they're in on the main channel. And so again, I can't give it away, but what I can tell you is loan to value on this car is probably going to be somewhere in the sub 80% range. That's like vague enough that people wouldn't be able to do the math to backtrack to figure out the total price on the car. But regardless, that is an ideal situation. So again, anything under 100% is great, but if you can be under 80%, then that's even better, because once you surpass that 20% range, then what that shows the lending institution is you have a lot of commitment towards the vehicle. And then on top of having a lot of commitment towards the vehicle, if anything happens where you're not able to make even a single single payment, like that's enough equity in a car that you should be able to get out of it in most pre-owned cars and with most new cars. Now, the next part of this deal is the lending institution that I went through. I went through a local credit union, and the reason I went through a local credit union is because I've been slowly building up a relationship with this particular credit union. I've banked with them for several years at this point. I've taken out several auto loans with them as well. And so not only do they have my money, obviously, but on top of that, they have this history of my repayments on auto loans. And I've paid off several auto loans with them as well. And so, you know, between those two things, they know that, well, if I take out an auto loan, I'm going to pay it back. So they have a guarantee on their money with me, which is obviously huge for lending institutions because, you know, people that default on stuff, right, that's the exact opposite of what they want. And so if you show that you're good at making payments and you work with a local business, sometimes they're gonna be willing to give you better deals. Now, the next thing that I did, and this was completely unrelated to this car purchase, but it did benefit me in this car purchase, is I took out a certificate of deposit with this particular lending institution. They had a special where they were offering something like 5.25% APR for 12 months on a certificate of deposit. So you could literally make over 5% on your money in the certificate of deposit over the next 12 months. And so I basically parked some money in there. And so by me doing that, the lending institution basically has collateral, right, in the form of a certificate of deposit. And so this makes it so they're more willing to give me an even better interest rate considering everything that we are, you know, currently experiencing in the interest rate world. However, I do want to mention that I understand that the last thing that I just mentioned isn't going to be practical for everyone because, well, most people here in the US live paycheck to paycheck. And so taking out a 12-month certificate of deposit is not necessarily practical for everyone. But if you do have the ability to do that, and if it makes sense, right? Again, not financial advice, it has the potential to get you a better deal on the interest rate. Not guaranteed, right? Not guaranteed whatsoever. But in my case, it did help me out quite a bit. And I guess the other thing that I should be completely transparent with is the amount of money in this particular certificate of deposit is multiple times more than the value of the car that I purchased. And so, again, you look at this from a lending institution perspective. This lending institution has collateral for me that exceeds the loan that I'm going to be taking out from them by many, many times. And so again, from their perspective, it's a very low risk loan. Okay, so I've held off the interest rate thing for a little bit too long. Let's get into it. 6.74% is my rate for 60 months on this vehicle. And again, the average based on what dealers have told me currently is like 12+%. So I literally got an interest rate that was half of what most people are going to be paying on a pre-owned car. And frankly, the dealership that I went through to purchase this car told me that this is lower than what they expected. They originally wrote my rate at almost 8%. Now, they weren't trying to hold rate on me. I know some people are going to write down in the comment section below that dealership was trying to hold rate so they could make money off of a warranty. I've bought like 6 or 7 cars from this dealership. They weren't doing that. They genuinely thought that I was going to get a 7-something% interest rate because based on previous car deals they've seen with people that have similar credit to mine, that's what they've gotten. And then when the approval came through and they saw the rate, they were like, this is a lot lower. So then they obviously told me, hey, by the way, it's not going to be 7-something%. Instead, it's going to be 6-something% instead. And so now let's talk about why I even took out this loan. And it's for a few professional reasons and then also for a personal reason as well. The personal reason is taxes. I haven't finished my taxes for 2022. I'm a business owner and it always just takes longer to do taxes. And so I don't know my exact tax burden for the 2022 year. And so what that means is I want to be a little bit more cash heavy than I normally am, just in case I owe more than expected. So then I don't put myself in a situation where I can't pay Uncle Sam, because you just never want to be in that situation, especially as a business owner. And then when it comes to the professional side of things, I thought it'd be really cool to take out an auto loan to be able to talk about it on this channel and then also on the main channel as well. Because again, interest rates are really high right now, especially compared to what we've seen over the course of the last decade. And so I thought, what better way to be able to talk about the current interest rate situation than go out and, well, buy a car that I was going to buy for the channel anyways, but then take out a loan on it and see what it's like getting approved, see what kind of interest rate that I could get, you know, if I had to jump through any hoops, all that kind of stuff, and then again, be able to talk about it in video. So I thought that would be pretty cool. And then the other side of things, the car that I purchased is a car. It's not a truck or an SUV. So it does not have a gross vehicle rate rating of over 6,000 pounds, which means that I'm not going to get as big of a write-off from a business perspective, although this is still a business purchase. And so I'm taking out this loan to see kind of where I'm going to end up when it comes to taxes at the end of this year, to see if it makes sense to pay off the loan in full after the 6 months that I have to have the loan for. It's an agreement that I put forth with the dealership. If you don't know, if a loan gets paid off before 6 months that you took out through a dealership, then the lending institution will actually fine the dealership for basically giving them a fake loan. So you have to have the loan out for at least 6 months. But regardless, it's basically to also allow me to see, okay, if the write-off is going to be this small, that means that I'm going to have a tax burden of this amount. Does it make more sense from a business perspective to pay off the loan and just pay the taxes, or to just pay the taxes and continue to just make payments on the car and pay off the loan at a later date? And that's just it. Again, if you run a business, you understand you're always juggling between taxes and, again, depending on your business, sometimes loans. For the most part, I've tried to keep this business completely debt free, and then also obviously just everything else that's associated with general expenses, right? So in summary, I decided to go out and get an auto loan on a car that I just purchased to see what it would be like to get an auto loan right now. And again, I also did it for some business purposes as well. And spoiler alert, the thing that I do want to mention is chances are at the end of the 6 month time period that I have to keep the loan for, I'm probably just going to end up paying it off. Even though I said I'm going to be waiting to see what the tax burden is, I don't like to have any sort of debt, especially for the business, because I think that the best way for me to run my particular business is to be completely debt free. So I'll give you guys an update at the end of the 6 months if you guys want to hear that. But anyways, it was a lot different than I expected. Going into this, I expected that it would be harder to get approved because, again, there's a lot of credit tightening right now. I expected that I would get a much higher interest rate than I got. And yeah, so when everything was said and done, I was honestly surprised by the whole situation. So if you work with the right lending institution, if you have things set up under the right circumstances where that loan is not risky for that lending institution whatsoever, you can still get a really good, well, good for today's market, right? A good interest rate compared to what other people are getting. So I hope that this video helped you out. Again, not financial advice whatsoever, but let me know what you guys think about this whole situation. I'll see ya.